We are starting to see Fed presidents disagree and disagree in a big, big way. This is an important thing to understand because one of them will likely be right. The other will be historically wrong. And where I'm going with this is we have Fed President Christopher Waller telling us that we will have 3 or 4 rate cuts in 2025, saying that March is a possibility. And then we have Fed President Hammock, which basically says Waller is smoking crack. My words, not hers, but saying we can.
You didn't use those words?
No. More politically correct than I was, but basically saying that the Fed can be very, very, very patient with rate cuts in 2025. So I wanted to talk about this conversation. I wanted to pull and steel man both arguments because, again, one of them likely will be spectacularly right and the other spectacularly wrong. And this will be important for all of us, who is right and who is wrong. So, Taylor, feel free to pick a side and let's steel man why that side could be right, and then we will go the other way.
I would be shocked if we don't land on the same side of this argument, because I think we have both been, relative to what the Fed has done and said, we have both been hawks, you and I. So
no for like a year and a half.
Correct. We both said get on the gas sooner than they did with raising rates. And then we both said, like, be a little bit more patient than they have been when it comes to cutting rates. And by no means were we making the argument they shouldn't have started to cut rates. They did, and they should have. But it's just been far too quick, in my opinion. And the reality is, like, the dual mandate of inflation on one side and then unemployment on the other side. Inflation has come down relatively well until, middle part of last year, and then it bounced and it's chopped sideways and reaccelerated marginally. Even last week, the number that we got was celebrated in the market, but it wasn't that inflation came down.
It wasn't a good number.
No, it wasn't a good number. It was not as bad of a number as the market had feared.
The whisper number.
So now we've got inflation moving back up, and the Fed's still, talking about potential for rate cuts to come, or at least Chris Waller is. I see very little logic in any of that, especially with unemployment pinned down and our hiring continues to be above, what the trend of the market believes it was going to be going into the numbers. So it's just this whole fictitious neutral rate of there has to be some relationship between where federal funds rate is and where inflation is. And the thought that it's too wide right now, and thus we're very restrictive on the economy. Show me anywhere in the economy where it says things are restrictive right now, because I just don't see it.
Yeah. Well, let's have some fun with this, because, again, I think you're absolutely right. I think we both, as of today, we think Hammock's right, Waller's wrong. But let's have some fun with this. Let's pretend Waller's right. What has to happen over the next 60 to 90 days for a March rate cut?
Unemployment has to be.
Yeah, I think I think number one is unemployment has to go up. So let's try to put some numbers on this. And again, the unemployment rate went down, not up, last month. Let's not forget that, right? It went from 4.2 to 4.1. So we are going to get a January reading in early February. We will get a February reading in March. So that's where it is. If Waller's telling us that a rate cut is possible in March, I would think the unemployment rate would have to get to at least 4.4.
Mm-hmm. Agreed.
And the weekly unemployment claims, which have been pegged at about 220 for 9 months, probably has to go north of 280 and probably north of 300.
Yeah. So the question then becomes, is there anything out there that could possibly do it? And I do see one potential canary in the coal mine, and I don't think it's reality because I don't think it can happen that quickly. And that's the fact the government hiring trend flips and becomes a government firing trend.
Yeah, that, to your point, a lot of these things like a 4.4 or 4.5 unemployment rate is absolutely possible, but that quickly, the other one that again, on a lot of the things that I watch and listen to, there's a pretty consistent drumbeat that the data is somewhere between complete lies to fictitious to wrong to this, that, the other. So I just want to put this out there. If that, what I'll call a conspiracy theory, which, oh, by the way, a lot of conspiracy theories have been proven right over the last 2 years. So
Totally.
let's respect that. If we get another revision of 817,000 jobs disappearing, which has happened, oh, by the way, and, we get seasonal adjustments that have been incorrectly calculated because, we're no longer this, we're that. And, these adjustments force the unemployment rate to go from 4.1. I mean, theoretically, just that, could go up. So again, I want to acknowledge that if all of the loud and consistent noise about the jobs data being wrong, a fraud, managed, blah, 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 prove right, that could make Christopher Waller correct.
I am a almost anti-conspiracy theorist because I think most of 99%.
It's hard to invest with those. Yes.
Yeah, and they just, in hindsight, they're all unfounded. At least 99% of them, and then the 1% that are, they get heralded, echoed down the chamber, and you hear all about them. But I do think, with that said, I do think that there is more noise in the jobs data that could be potentially incorrect than maybe throughout history. And the reason I say that is because you look at non-farm payrolls, which is what the government will announce and talk about ad nauseum. And then you look at household surveys on the other side. Household surveys these are both incredibly flawed processes, by the way.
Oh, yeah, horribly flawed.
So this is why
they've been horribly flawed.
Totally. But I will say this. So essentially, on the non-farm payroll, they call businesses and say, hey, are you hiring or firing? Okay, click. And they answer at about a 42% rate right now, which is down about 20% since pre-COVID. So that's important. Yeah, on the other side, they call households and they say, Mr. Zuber, do you have a job? Yeah. Have you been unemployed? Yes or no? And so that's the process. Both of them suck. Like, we can all agree.
They've always sucked. It's not a new suck. It's an old. Yeah. It's just.
Yep. But they say pretty dramatically different things right now, where the non-farm payroll that gets talked about is a much prettier picture than what the household survey is saying. So correct. Household survey says over the past year, we've seen a reduction in workforce outside of government, which has kept it marginally positive, of 1.3 million jobs. Yeah. So that says private sector. And now you also have a lean right now of technology moving that direction too. So you had Meta come out and say, we're going to cut 5% of our workforce. Yep. You also had Microsoft say, we're going to come out and cut our workforce specifically on the consulting side. And they're going to use the excuse of underperforming workers. And rightfully so, fire underperforming workers. Like, that's what you should do. That's a business. Right. But is it that, or is it more broadly speaking that they're cutting workforce? It's not necessarily underperformers. It's that they both announced on the same day, happenstance, that they're going to start cutting. And it was a little bit of a shot across the bow, I think, because last year they went from let's spend like absolute drunken sailors specifically on AI. And now I think what's happening is it's catching up to them, that they realize that AI, maybe the profits aren't there yet, and therefore they can't continue to spend, although they're going to on AI. So they need to cut somewhere else.
Yeah. So the other thing that would go Waller's direction, because I do think he needs a double dip. I think he needs a unemployment rate to go up significantly. 4.1 to 4.4, I think, does it. But the other thing that is horribly wrong in the inflation calculation is all these imputed costs. Shelter inflation being the largest, just absolutely atrocious, wrong calculation out there. I've been screaming for 18 months. But, there's a chance that shelter inflation finally rolls over, and rolls over hard. I've done some back of the napkin math the last 6 months on CPI inflation correcting for shelter inflation, because I believe last month it was shelter was reported at 4.6. I actually zero that out, right? And then do back of the napkin math, and inflation's under 2% and has been under 2% for quite a while if you correct for that imputed cost. So, that's going to correct itself eventually. So I think Waller would need imputed costs to go the right direction in a meaningful way, because I don't know how you get a March rate cut, but that's what he's calling for, right? He's saying it's absolutely possible.
Yeah, so you're now shifting your focus from the unemployment side to the inflation side. The interesting
I think he needs both. I think he needs both.
I totally agree. The other thing on the inflation side is that you have a tendency of seasonally higher inflation in Q1. And
true.
so
that's true. Yeah. That's true.
It happened last year. Last year, there became big concerns in Q1 that inflation was going to pick up again, and you saw rates rise. And then inflation kind of rolled over and rates settled back in. And then Trump trade caused it to reinvigorate and pop again. But when you think about it, it's just very, very logical. As you're a business, you roll into the new year, you say, hey, we have to adjust things from a pricing standpoint. And so all at once, systematically, businesses, if there's one time a year they're going to do it, what's the most likely time to do it? On the new year. And they're replanning and reorganizing, and prices go up in Q1. That is a strong tendency to happen.
Yeah, I like all that. So again, I think Waller's, if you're playing blackjack, I think he's got to get dealt like 4 blackjacks in a row. So it's possible. It has happened. I've actually seen it happen before, which is
he's got to get an ace, split it, another ace, split it, another ace, split it, and then he's got to roll blackjack on each one of them. I love it.
It can happen. I personally don't see it, but hey, it can happen. So let's go over to Hammock. Again, shout out Michelle Bowman, who was the first dissenter. Back when we did a 50, she said, you guys are nuts. Should have been a quarter. Probably the most impressive thing that Hammock said when she was interviewed, and I think this was last week sometime, was just this underhanded, dirty slap across the face. She said, and I'll be close, so this is not quite a quote, the Fed did its job lowering rates 75 basis points last year. Now think about what she just said. If you actually know what happened last year, we actually lowered rates 100 basis points. Yeah. So what she is saying is that December rate cut was a mistake because she didn't do that. She knew what she was saying.
Yeah.
And I agree with her. I actually came out and said repeatedly that the December rate cut was a mistake and they shouldn't do it. But, all of that. So I thought that was just a very elegant way to say what she probably wanted to say, but probably couldn't. But yeah, December rate cut, a mistake.
I said, for the record, I said going into the December rate cut that they were going to do it and they were going to be wrong. And I tend to stand by that. So we'll see. I'm on your side on that. I'm on Bowman's side. I'm on Hammock's side. I'm on all that.
Yeah. So again, I don't think, when you think about what Hammock has to be right. So let's say June, I think Hammock did say that, this rate cut in the second half is possible. She's thinking 1 or 2 as possible, but also is 0, which again, I've been calling for quite a while. So I think it's kind of just status quo, right? Unemployment stays below 4.3, CPI inflation. The crazy thing about CPI is the trend is up. You can't argue it. It went from 2.4, 2.5. No, wait. Yeah. 2.4, 2.5, 2.6. Now it's at 2.9. Waller, that's not down, buddy.
and then also, Chair Powell comes out and says, like, listen, we have to scrap our inflation expectations in the future. And that, the entirety of the Fed, dot plots essentially had inflation going higher than what was already anticipated previously. So there's very little logic to be said for quicker rate cuts, and markets currently pricing 1. And even after that really good inflation data, which we all know is not great inflation data last week.
It's not good.
No, they couldn't try to price in. And by the way, the market has been, this is an interesting point. The market has been incredibly dovish relative to the Fed, who's also been dovish. So the market has consistently said more interest rate cuts are coming. And it's almost like they're fiending for it and wanting and trying to, will it into existence when, the market's now backed off and said 1 rate cut coming this year.
Yeah. That's funny. I remember when we were talking, I think it was 18 months ago. Remember when the market thought we'd get 6?
I think it was 7. I think it was 7. Right? We were doing this then too. So this isn't playing Monday morning quarterback. We were laughing at that.
Exactly. We got a playlist, baby. We got receipts. It's been crazy. So at the end of the day, I think Hammock, again, my opinion, Waller might run the table. It could happen. And
it's going to take a lot of aces.
It's a lot of aces, at the right time. Exactly. Taylor, where can people find you?
Yeah, find us at LifeGoal Investments. We're on Instagram and TikTok, putting out daily 60-second videos. And then our wealth management stuff, if you're interested, the link is right there. We'll set up a call. You and I will chat, whomever that you is.
Yeah. Thanks, family.